What's up, guys? Welcome back to the channel. Today I'm going to go over how I would have made $550 million if I started investing when I was negative 35 years old. But today I'm going to go over why I am switching my entire approach to investing and only buying Berkshire Halfway. Now, coming on from that joke, do you know if you invested $10,000 in 1965 in Berkshire Halfway to 2024, how much money you would have? You would have $550 million versus the S&P 500, which would only give you 3.92 million. And this is only because Berkshire Hathaway stock went up 19.9%, while the S&P 500 only went up by 10%. So you would have thought it'd be double, but because of compounding, it's grown substantially. Now, why did this happen? Berkshire Hathaway buys reasonably priced businesses at great valuations, and they're actively managed versus the S&P 500, which is not actively managed. Now, Berkshire Hathaway, in majority of its history, owned a lot of S&P 500 stock as well. And obviously, Warren Buffett will now be retiring from CEO and Greg will take over. So what I'm going to be doing so that I can prepare myself for the future as well, I'll be allocating a couple $100, some new money into just to the Berkshire Hathaway stock to buy Class B stock and to slowly build up my portfolio. We were always invested in this through ETFs that I was buying. However, I want to have a more active approach. And if Greg can continue to put up great numbers, just like Warren Buffett did, I do not see any reason why the stock cannot keep compounding at a 19% growth rate. And if they do great, why on earth would I buy the S&P 500? I'm still going to obviously buy them until I see a reasonable enough reason to switch over the entire portfolio. Now, the second reason why I love Berkshire Hathaway and why I'm going to be doing this is its lower volatility and its cash strategy. Because it's an active fund, they are able to utilize cash better because the S&P 500 is just an active fund. It will just keep buying and it will not do anything else. As you know, Berkshire Hathaway at the moment holds just under $400 billion. Now, they might use this to fully buy out a business and make it privatized under their business. Or they might just reinvest into their stock, or they might just buy a different business. Who knows what they're going to do? But because they have so much cash, they're able to take opportunity in mind. And also, their beta is only 0.87. Now, if you don't know what a beta means, it means how volatile the stock is. So it's less volatile than the market. And here's like the charts. You can see clearly that the stock has had some buying opportunity. However, it has been a very, very easily compounding stock, and it is just fantastic to buy. And being able to utilize a brain like Greg's, I really do think they'll be able to continue to purchase great businesses at a great price, making me a lot of money. Now, the last point on why I really am doing this shift is because they are diversified like crazy. Berkshire Hathaway owns so many private businesses like Geico, which is insurance. He owns railway companies. He owns gas giants. But then he also has big stocks like Apple, Coca-Cola that pay him huge dividends a year. Pretty much his whole strategy is that he avoids high ticket items. Like AI right now is not something that he wants to buy quality businesses. He does not want to be buying something that's speculative. And you know what? That's fantastic for my index. Pretty much Berkshire Hathaway is just a mini index. It's just a mini S&P 500. However, it has doubled the performance, and I would have substantially made a lot more money investing into them over the last 5 years. Let me show you this chart. If you bought Berkshire Hathaway for the last 5 years compared to the S&P 500, you would have doubled the gains you would have made in the S&P 500. Who on earth would not want to take that deal? And obviously, like I mentioned before, just because the past performance is amazing does not mean that the new future performance is going to be fantastic. But Greg has been taking over the company pretty much by himself already. And in 2021, Charlie Munger, the great Charlie Munger, has already said that Greg was already the next guy in line. So obviously, this is not something that's coming out of nowhere. They had prepared for this for a very long time. And trusting Warren Buffett's judgment that his own kids are on the board of his Berkshire Hathaway as well. Why on earth would they want their stock to suffer? I see no reason, and I see right now probably a better reason than any time in history to jump into this market, because there'll probably be some volatility as Warren Buffett's leaving his CEO seat. So a good buying opportunity and something that has continually performed is just a great, great, great opportunity. So if you guys want to do it like how I'm doing it, I'm going to be slowly allocating. Right now, I'm only going to do $100 a week into Berkshire Hathaway stock, and probably every few months, I'm going to up it by $25 every week. So then it slowly goes from 125 to 150. That's the same thing I do with the S&P 500, and probably I'll get to a point where I want to spend $1,000 to $2,000 a month buying Berkshire Halfway stock, and then I'll probably leave it as there, as that's how much I actually like to spend on individual ETFs. Anything else other than that, I like to reinvest into businesses because businesses are my core growth model. I just want to be diversified, and obviously I want to reap the benefits of having indexes like Warren Buffett's Berkshire Halfway. Thank you so much for tuning in, guys. I hope that I was able to give you some insight, even if you don't want to invest. And hopefully in 5 years from now, I can tell you that I am a quadruple trillionaire because I invest into Warren Buffett stock. Thank you so much, guys. Have a great rest of your day, and please subscribe. I really appreciate it.